Hello everybody, welcome back. Hope your Sunday is going well. Let's have a look at Bitcoin and what's going on with this market. So effectively Bitcoin continues to go sideways. Looks like an accumulation. We've spoken about this before, from around this kind of zone. This looks like the way it wants to go. It wants to hang around from as low as 46, as high as 46, to potentially back into this box, or maybe even a little lower at just around 29,000. So we've been waiting for a really good buying opportunity for not so much Bitcoin, because again this zone for me has been bought out. The next buy order I've got is here, and anything other than that is going to be manual entries based upon what takes it there, you know, whether it's black swans or what. But based upon the chart, it's reasonable to assume that we're going to end up back into this zone, which is around 35 to as low as 32. And if we think about that from a measurement perspective, so where we are at this current very second in time, the top area is 11%, the bottom area is about 16%, and that's where we'll be looking to go to start with. And if we did, for whatever reason, want to go down further, there's a very strong level of support down here around 28, 29, and that would probably cause, at least, if anything, an enormous bounce. Right? We're not talking. It could go on to, effectively go all the way back up like it did on these previous bounces. And again, this is a more historic and strong level of support. But for the moment, sideways and down is what it looks like to me. At this very moment, getting rejected on the 10 exponential. It's not a good sign. It does look like it wants to go down further, and this is all just on the daily. So we've been sitting around waiting for the Fed to tell us what it is that they're going to do, whether it's 0.25 or 0.5 or whatever. We just need some kind of structure so we can base our trades around it. Now, everyone and their mother has anticipated rate hikes, which is why everything is basically consolidating to this extent, at the same time that inflation is running crazy, running high. That's your inflation. It's going all the way to the moon. And stocks, commodities, well, not commodities actually, but crypto, it's all going down. Isn't that a bit counterintuitive? Yeah, it is. And this is markets for you. So markets are counterintuitive. They're kind of basically doing the jobs of the Fed in advance, right? This is the way it goes, right? So if you think about what happened over here, we had Fed turning on money printers, and inflation basically was being priced in. We're going to have high inflation, guys. Let's get back in. Let's go crazy. Risk. That's all we want right now. And then we finally get inflation reports, and everything goes down. What's going on? But inflation's high. Isn't it supposed to be good against things that you're supposed to invest in? Well, yeah. But markets basically priced easing prior to the events. So what we're looking for now is the clarification. We're going to get 0.25, 0.5. How many rate hikes are we going to get across the year? The end goal, I honestly think, is just like the market prices everything in, whether that's inflation priced in prior to the inflation or the rate hikes priced in prior to the rate hikes. I think once we get the rate hike involved, then people are going to actually want to start spending some cash again. So retailers not so much, but hedge funds, institutions, and whatnot are going to start adding some cash, putting it back to work, basically. So you can understand that, right? This is how markets behave. You hear the thing which is buy the rumor, sell the news. This is basically what's going on here. Buy the rumor, sell the news. Sell the rumor, buy the news. And even though that the Fed stopping to buying bonds and increasing rate hikes, stuff like that, is effectively to tackle inflation, the counterintuitive reaction of markets are likely to be the opposite. So hang on a minute. So inflation's going down, but assets are going up. Yeah. Yes, I truly think that that's likely to be the case, because we've already priced in the inflation. Now it's time to get back in. It's counterintuitive. You know this. You all know this. You only make money if you're buying the lows. Serious money when you buy the lows. You buy the red candles, right? You don't buy the green ones as much as you buy the red ones if you want to make the serious moves. And at the moment, if we go to a weekly, we've got a lot of red candles. Let's go to a monthly. How many red candles we got now in the monthly? A lot. So what you do is you buy into the red. The red candles are the way you make the money. That's what it's all about. Yeah, red candles. Buy the red candles, make the money, and this is basically the deal. So Bitcoin hanging around still at this very moment in time on the monthly at a considerable low, but also if we can hold above that level and close above that level, again we're only halfway through the month, not even that, the bulls have a good chance of a serious bounce. So we've been speaking about Bitcoin specifically, but I mean this goes to everything, and we can see this with the Nasdaq. The Nasdaq on the monthly here looks pretty tired. It's a worse position on a monthly than Bitcoin is. We're below the center of the Bollinger Band, below the 21 exponential. We're heading down to our next major level, horizontal level of support here on a monthly this is. And if we were to drag that all the way down, we've got an area of 7.5%. And if we come down to the bottom of the Bollinger Band and the green 50 exponential, we're about 15%, which does look like that's what it wants to do. It does want to sort of reach down into those zones. Maybe not potentially that far, but at least this far. So there's a correlation between Nasdaq and Bitcoin because they're both risky assets. They're both effectively tech, aren't they? It's all tech stocks sort of thing. You could argue that Bitcoin is effectively a tech stock or a tech commodity or whatever. So it does look like a bit further to come down, and this goes into our major plan for buying altcoins. So as I've already said, I've bought that Bitcoin zone out. The next area I would buy would be about 29,000, and anything lower than that I'll assess the situation and buy manually. But when it comes to altcoins, which is where some serious money can be made on these lows, the plan is still in play. This is the total 3, so total market cap excluding Bitcoin and Ethereum, and what we really want to see is a move down towards the 21 exponential, which is a 14%, or the center of the Bollinger Band, which is an 18% drop. That's what we want. This is where we would make some effectively blind risk and start to buy into these zones blindly for what could be a serious bounce for the small cap coins. And I'm talking small cap. I'm not going to start naming everything. People start to want to copy my trades, but I mean things like BITRUE have historically had enormous bounces. We're trading at very low volume at the moment, which means that those who get in on this at the right time get in at the they're basically king of the Ponzi. Really, any money that comes in after that can be seriously. Seriously beneficial. We've seen this in the past when we came down to this level, but in the past, pretty much exactly where we are. This isn't a video about BITRUE. I'm just giving you an idea of what happens with small cap coins. So we come down, we make a bottom of the market, we come from the bottom to the top 640%, just on a bounce. It's just a bounce. This is where we started this effective descending trend line, and that's what we'll be looking for, just a bounce. But the small caps are going to bounce really hard if this works out, and I think that this is how I'll be looking to play this market. Nasdaq wants to come down. Bitcoin looks like it wants to meander down. Altcoins, with the Bitcoin dominance being so low as well, looks like it wants to go carry on up as well. So altcoins getting hurt in the short term, but then when they get to that particular level, we'll be looking for a serious bounce. Whether that's, like I say, between 13 and 18% from further for the market cap. So that's going to vary for different altcoins. Some will move less, some will move more, but the small caps will move more down, and they'll move much harder on the way up. So I'm looking probably towards the end of this month for some serious volatility. Big move down, huge bounce up, right? Is it a bounce that's going to cause some kind of continuation? It could do, but we've got to navigate through the lens of a Bitcoin while trying to entertain if altcoins can continue. What I am looking for though is some serious bouncing to take place after that rate hike. So we're looking for probably a shock in the market, whatever it is they decide to do, especially if it's 0.5, but if it's 0.25, probably won't get an enormous amount of shock. You'll probably get volatility on the day, might not be particularly interested in buying on that day, but it would be very interesting to see how the markets behave. And I expect that, just like we said at the beginning of the video, markets like to price in the event before it happens. So effectively doing the job of the Fed already. So this did the job of the Fed, and this has done the job of the Fed. And again, now the Fed is going to just do something which is meant to tackle inflation. Whether it actually has a large effect on it, we couldn't really say, but it doesn't really matter. The charts, whether it's Bitcoin or Nasdaq or whatever, have already priced it in, just like they priced in the inflation prior to the inflation running high. We knew it was going to run high, we knew it was going to get tackled. Now what we know is that it's going to be addressed, and then I would expect to see some decent moves up, surprisingly up, in the face of the Fed doing their thing. So it's a simple counterintuitive trade, and again, it doesn't have to work out, but the idea is to have a plan. We've been planning on this channel to keep a lot of our money aside for this event specifically, and now we're literally just a week away from that. And so next week is going to have some serious volatility and maybe the buying opportunity that we've all been waiting for altcoins, small cap ones. So let's put some risk. Well, I'm not going to tell you what to do, but I'm going to put some risk on the table. Why not? You know what I mean? This is a high stakes game we're playing here, and you can't just sit on the sidelines forever. The plan has been this way for quite a while now, and the plan is hopefully going to start to come to fruition starting from next week. So if we was to draw some form of candle body, this is just for Bitcoin going in, we're looking for a breakdown, probably a dip into here, and then probably a bounce up to this 200 exponential around these kind of levels. So this is what we sort of imagine might happen next week. Dip into here, 13% down, and then I think effectively going back up to this 200 exponential and seeing where we go from there. And the size of the altcoin moves for, you know, like I say, they're not necessarily trending with Bitcoin. This is the entire world economy is going to be doing something similar to this. They are the ones that are going to make some serious cash if it works out how I expect it to. I'm not saying it's going to go into reversal, just remember that. I'm not saying we're going to go into reversal. What I am saying is that we could easily, not easily, but there's a very good chance that if we play our cards right, we could look to double or triple our money in the wake of that rate hike. So again, it's very counterintuitive. I know how it sounds, but that is the way it's likely to be. Right, I'll leave it with you there. Bit of hopium for you there, but we have been talking, it's the same old story. We've been talking about it for weeks now, and as we draw closer to that day, and you know, the moments and days after that event has taken place, the chances are that there will be some serious rallies going on across the board. I'm going to add to my stocks and shares ISA, my pension. I'm going to be adding to it all from next week. Anyway, thanks for watching. Hope you have a nice day. Take it easy.